Okay, so we are continuing. Now we will have to do a problem from the exercise. You can take page number 10.34. Page number 10.34, question number 2. You may read the question. Question number 2 in page number 10.34. Okay, so what is given in the question? XYZ Limited, ornamental company, has been a name to count for quality and service. So the entire information is with respect to a company called XYZ Ornamental Company. XYZ Ornamental Company. What does this company, what is the specialty of this company? This is a company which focuses on quality, which gives so much importance for quality. Okay, and what does the company do? It has been designing wide range of ornamental products for more than 2 decades using the highest quality standard. Ornamental products, designing ornamental products, designing ornamental products for the last 2 decades. Okay, such quality is achieved through years of experience and integrity that is maintained by its employees. They are known for their perfection. So the USP, or you can call it as competitive competency, distinctive competency, competitive advantage, whatever, is what? Quality. Okay, right. Now VGG approached XYZ to make inquiry of two approached XYZ to make inquiry of 2 products. So there is a customer. What is the customer? Name of the customer is VGG. VGG has approached XYZ with an inquiry for 2 products. The 2 products are indoor fountain known as the Star. Okay, so what are the products inquired? One is indoor fountain. It's a fountain to be kept in indoor. And what is the name of this fountain? They have named it as the Star. The Star. Then what is the next product? and a large gnome known as dwarfs for garden. Okay, large gnomes. What do you mean by gnome? Gnome. What is that? Gnomes are some tiny structures, okay, which are kept in gardens. Okay, usually when we see this gardens or parks, we can see some dwarf with a white beard standing with a stick. Okay, it's a very peculiar character which is designed and kept in these gardens. Okay, and these structures of a white bearded man standing with a stick in hand is what is known as gnome. Okay, GNOMES. Okay, and these are the two products, and there is one name for this particular product also. What is the name? They call it as dwarf. Okay, so these are the two products which VGG is interested to buy. Okay, now what else? Mr. Bob, the management accountant of XYZ, has estimated the variable cost per unit of star and dwarfs as being 622.50 and 10375 respectively. So variable cost is given. Variable cost per unit. What is the variable cost of star? It is rupees 622.50, and for dwarf it is 103.75. Is it clear? Okay, right. Now he estimated his calculation based on the following information. Product data. He has given the product data. What is the total sales of production for the star is 10,000 units, dwarf it is 20,000, and there are other products also. Dwarf and the star is only two products among a wide variety of products. Okay, and other products cumulatively sell how many units? 80,000 units. And total direct material cost is given 22,50,000, then 7,50,000, and total direct material cost of other products comes to 60 lakhs. Okay, then total direct labor cost is 15 lakhs for the star and 5 lakhs for dwarf and 60 lakhs for other products. And total variable overheads for XYZ is 1 crore 20 lakhs, out of which 30% belong to the procurement, warehousing and use of direct materials. Yes. Okay, so you have the cost information. Okay, cost information given. Variable overhead, total variable overhead of the company of XYZ, how much? 1 crore 20 lakhs. Okay, and what do they say? Of which 30% belongs to, of this 30% and balance 70%. 30% is what? 30% is procurement, warehousing and use of direct materials. Procurement, then warehousing and use of direct material. What is the significance of this 30%? Procurement, then warehousing and use of direct material. Yesterday we have seen that these types of costs are volume based costing. Volume based cost. What do you mean by volume based cost? Volume based cost in ABC costing means those costs which can be allocated to the products based on the volume. Okay, so these costs come under that particular category. It is a volume based cost. Is it clear? Okay, now balance 70% is what? 70%, they are not mentioning anything, so you have to say that this is other cost. Okay, right. Now while all other variable costs are directly related to labor, so if it is directly related to labor, then you can't use the volume as a basis. Okay, because you can use the volume as a basis if it is product related. It is related to labor, so you have to take some other basis for that. That is the indication. Now next, XYZ presently allocate variable overheads into products using percentage of total direct material cost and total direct labor cost. Yes. Now presently what they do, this entire overhead is apportioned. This entire 120 lakhs is apportioned based on the proportion of using percentage of total material cost. Percentage of total material cost. Okay. For which type of category? This 30% is material related. That is absorbed based on percentage of material consumed. And here this is based on the percentage of total labor cost. Okay, this is the present method. Presently, the overhead of 1 crore 20 lakhs, out of that 30% relates to the products which is absorbed based on the total labor material cost, whereas the other 70% is direct labor related and which is absorbed based on percentage of labor, total labor cost. Okay, which is not a scientific method because ABC costing says these costs are driven by some activities. So, and the activity, each activity will have activity cost drivers, and the consumption of activity cost driver will be separate for these two products. So you can't simply take this material cost as a basis for as a basis for allocating warehousing cost. Okay, or what do you call the volume based other procurement cost or use of direct material, because certain products sometimes large norms may not or dwarfs may not require any warehousing. So if you take the percentage of material cost as a basis for allocating this particular cost, even a substantial portion of the cost will get allocated to dwarf cost, dwarf also. But dwarf is not using, it does not require any warehousing. So ideally, warehousing cost should not get allocated to dwarf. I am telling you a hypothetical situation. Okay. So what the modern ABC costing says, you have to see each activity and see how these cost drivers are consumed by the your products, and based on that you allocate the activity cost, not based on any single or blanket rates. Okay, right. Now next, BGG is willing to purchase the star at 740 per unit and dwarf at 151 per unit. So variable cost is available. Then selling price per unit. What is selling price per unit? For this one, this is 740. Star is 740 and dwarf is rupees 151. Right? Then XYZ will not accept any work yielding an estimated contribution to sales ratio less than 28%. Wow. So no order will be accepted if what? If contribution to sales ratio is less than 28%. Is less than 28%. What do you mean by this contribution to sales ratio? We have seen this. This is nothing but the PV ratio. So if the company wants to accept this particular any order, it requires a minimum PV ratio of 28%, below which it will not accept the order. That is the policy of the company. Okay, now going ahead, the directors of XYZ are considering switching to an activity based costing system. See, presently it is some other traditional costing method where material related overheads are absorbed based on the material cost, whereas labor related overheads are absorbed based on labor cost. But now they want to switch over to activity based costing. Okay, and recently appointed management consultant firm to undertake an in-depth review of the existing operations. As a result of that review, the consultants concluded that estimated relevant cost drivers for material and labor related overhead costs are attributable to star and dwarf are as follows. So one management consultant was appointed. He did all ABC study. He analyzed the entire activities, and again what he did, he classified these activities into material related activities or volume related activities and what the direct labor related activities. Okay, and he arrived at a ratio which can be used for allocating these material related overheads and labor related overheads to these products, and this ratio is what is given. Material ratio per product unit will be 585 and labor will be 7, 6 and 5. Okay, so that is the ABC costing information. Now, required, give a financial analysis of the decision strategy which XYZ may implement about the manufacture of each product using the unit cost information available. Discuss whether activity-based management should be adopted in companies like XYZ. Okay, so we will have to do the problem. Okay, first what you have to do, you have a okay. Now, what you have to do here, there are only two types of cost. Okay, one is material related cost and the other one is labor related cost. And there is one peculiar nature of these two types of cost. Both are nothing but variable cost. Is it clear? So the entire question is about analysis of the variable cost alone. There is no information about the fixed cost given. That is the first point you have to keep in mind. Okay. Now, at present, you know that the company has worked out a variable cost per unit of 622.50 and 103.75 for each unit of star as well as dwarf. Okay, and the VGG, the new customer, has quoted 740 for star and 151 for dwarf per unit. So first you have to see, based on the existing system, what would be your decision with respect to the order. There is a condition that no order will be accepted if the contribution to sales ratio is less than 28%. So first you have to see whether the present PV ratio, contribution to sales ratio, is less than 28% or more than 28%. Is it clear? Okay, you first see that. Then after that you recompute the variable cost on basis of what? On the basis of ABC costing. What are figures or details are given in the question. Based on that you recompute. Is it clear? After recomputing, then again you compute the contribution to sales ratio based on the revised variable cost per unit and see whether your decision is same as the original decision. That is how you are going to do in this particular problem. Okay, so you can write a note in the given question. There are no information relating to the fixed cost. Hence, the entire decision of acceptance of order is taken based on the variable cost. Okay, hence contribution to sales ratio or PV ratio is taken as the basis of evaluation. Is it clear? Okay, now what do you have to do? Computation of the existing contribution to sales ratio. Okay, you have two products. the star dwarf. Selling price per unit. It's 740 and 151. It is quoted by BGG. Okay. Less variable cost per unit. How much is the variable cost per unit? 622.50, 103.50. That is what they have computed, 622.50 and 103.75. Okay, so here you can write the existing variable cost per unit is computed by whom? Who has computed it? The management accountant. By the management accountant based on traditional method of overhead allocation. Overhead allocation. Okay, right. So you can compute here the contribution per unit. What is contribution per unit in the first case? 740 minus 622.5 will be 117.50. And in the case of dwarf, 151 minus 103.75, 47.25. So contribution to sales ratio. $117.5 divided by 740. This will come to 15.88. Then 47.25 on 151. This comes to 31.29. See the contribution to sales ratio. What is the minimum contribution to sales ratio required? 28%. So if you go by the percent cost structure or cost allocation method, what would be your decision? Decision will be decision with respect to the order. What would be the decision here? Required is 28, but you have only 15.88 in case of the star. So what is the decision? Do not accept the order. What about the dwarf? You require 28 minimum, but you have 31. So accept the order. Okay, now what you have to do, this is the existing method and the decision based on the existing method of allocation of the overheads. Now the company wants to move to what? ABC based overhead allocation method, and based on that you have to recompute the contribution per unit, then your contribution to sales ratio, and see whether the decision changes. Okay, so go by the ABC costing. So second working note, computation of overhead, variable overhead allocation on the basis of what? On the basis of ABC costing. On the basis of ABC costing. How do you do this? The star, the dwarf. Okay, you have two types of cost. Okay, how do you compute the cost? It is given here. What are the cost available. These are the material cost and these are the labor cost available. Okay, so what I'm writing is a material related cost. Okay, total cost is 22 lakh. It is material cost, not material related cost, material cost. Total material cost 22 lakh 50,000 for staff, and for dwarf it is 7 lakh 50,000. 7 lakh 50,000. And production units is also available, based on which total cost is calculated, that is 10,000 and 20,000. 10,000 and therefore material cost per unit, how much? 22 lakh 50,000 divided by 10,000, 225. Then 7 lakh 50,000 divided by 20,000, that is 37.50. Okay, then you have B, labor cost. What is labor cost? Labor cost is 15 lakhs and 5 lakhs. Again, labor cost per unit. Production units is already written. So labor cost per unit, 15 lakhs divided by 10,000 will be 150. Then 5 lakhs divided by 20,000 will be 25. Okay. So what you have to do? These are the material cost and labor cost on per unit basis. Now you have to find out the variable overheads attributable. Okay. So variable overhead, total amount of variable overhead. What is the total amount of variable overhead? 1 crore 20 lakhs. Okay, then material related variable overhead is equal to, what is material related variable overhead? 30% of 1 crore 20 lakhs. That will give you 36 lakhs. Okay, so these are warehousing, okay, or retail or overheads. Okay, so generally this will be volume based overhead, so it will be apportioned based on the volume. Okay, now the basis of allocation is already given. Basis of allocation given by the management consultant. Basis of allocation in ABC is given by the management consultant. Okay, then what you have to do? You have to first balance overhead. Material related overhead we have computed. So 1 crore 20 lakhs into 70%. $84 lakhs. Okay, now what is the further information that is available? The information, they say that here we have certain information for allocation of the ABC costing. Okay, what do they say? The material cost related overheads. The volume of raw materials held to facilitate production of each product is the cost driver. Okay, so volume of raw material held to facilitate the production of each product is the cost driver. Material ratio per product unit is 5, 8 and 5. Okay, and what is the production volume? 10,000, 20,000 and 80,000. So the ratio is 5 is to 8 is to 5 for per product unit. How many products you have sold? You have 10,000 units of star, 20,000 units of dwarf and 80,000 units of dark other products. So what you can do, you can find out the quantity of material for each of these products based on this information, right? Okay, so we can write computation of volume of materials, okay, for allocation of variable overhead. How do you do that? We have a product, then units sold bar produced, okay, then material ratio per unit, okay, so total volume ratio. Okay, you have 3 products. One is the star, dwarf and others. Others is not the third product. It have the others refers to the other products. Could be one or many. We don't know. Units produced 10,000, 20,000 and they say 80,000 for other products. And for per unit, what is the ratio? 5 is to 8 is to 5. So ratio is 5 is to 8 is to 5. See, it does not mean that for producing 1 unit we require 5 units of this particular material. No, it is only the ratio. Okay, it could be 50 is to 80 is to 50, or it could be 500 is to 800 is to 500, or it could be some lower. This is only a ratio of material consumption by these 3 products. Okay, so this is per unit. So for 10,000 units, how much will be? The ratio will be 50,000, and here it will be 1,60,000, and here 4 lakh. So what is the total volume? 50 plus 160 plus 400 will be 6 lakh. 10,000 is the total volume. So the ratio for allocation material related overheads will be what? 50,000 is to 1,60,000 is to 4 lakh. Okay, this is the ratio in which we have to apportion. That's all. Is it clear? And what is the total material related overheads? Total material related overhead is, we have already computed. How much is it? 36 lakhs. Okay, therefore material cost to the star star is equal to 36 lakhs into how much is the quantity? 50,000 divided by total 50 plus 160 plus 4 lakhs. It will come to 6 lakh 10,000. So the amount will be 36 lakhs into 50,000 divided by 6 lakh. 36 lakhs into 50 divided by 610. It will be 295,081. This is for how many units? If this is for 10,000 units, you can compute per unit also. Okay, so material cost per unit of the star 2,95,081 divided by 10,000. That is 29.50 per unit. Is it clear? Now going further, similarly you can do it for labor also. Now this is for star. Now you have to do for dwarf. Material cost dwarf. Again 36 lakhs is the total cost. What is the proportion of dwarf? It is 160 out of 610. So 36 lakhs into 160 divided by 610 will be 9,44,262. 9,44,262. So per unit material cost per unit, that is equal to 9,44,262 divided by, what is the volume? 20,000. It is 47.21 rupees, 47.21 per unit. Is it clear? This is material related cost. Now similarly you have to do it for what? The labor related overheads also. Total labor related overheads we have computed. How much is 84 lakhs? Okay, and there is information with respect to the direct labor overheads. Direct labor operations per product unit. That ratio is available. So volume, computation of ratio of labor hours. Consumed. Okay, product total sales bar production ratio total volume ratio. Okay, first product is this star and total production is 10,000. What is the ratio they are working on? 7. Then dwarf 20,000 and instead of 7 it is 6. Then others 80,000. This is 5. So this will be 70,000. 1,20,000 and 80 into 5 will be 4 lakh. So 70 plus 120 plus 400 will be 5,90,000. So what will be the ratio? Ratio will be 70,000 is to 1,20,000 is to 4 lakhs. That is the ratio of allocation. Okay, right. Therefore, labor related overheads allocated. Okay, you can write product variable overhead allocated variable overhead per unit. Okay, product is this star variable overheads. What is the total amount? 84 lakhs. 84 lakhs. What is the ratio for star? 70,000 out of 5,90,000. 70,000 out of 5,90,000. Okay, I will keep this little heavy. Variable overhead per unit. So 84 lakhs into 70 divided by 590 will give you 9,96,610. 96,610 per unit will be this divided by 10,000, that is 99.66 per unit. Okay, then what about next? Dwarf. Again 84 lakhs into 1,20,000 divided by 5,90,000. 84 lakhs into 120 divided by 590. 17 lakh 8,474. 1708 474 divided by 20,000. It will be 85.42. It is 85.42 units. So what we have done, we have computed the per unit value of the material cost, labor cost, then variable overhead related to material, then variable overhead related to labor. Now you can find out the total variable cost per unit and contribution per unit. Okay, so computation of contribution to sales ratio in bracket ABC system. Okay, so you have two products. The star, other materials is not required for this because we are taking decision only with respect to the star and dwarf. Selling price per unit quoted by VGG. There won't be any change in that. It will be 740 and 151. Okay, the change only will be there in the variable cost. Variable cost per unit. Material cost per unit. Where is material cost per unit? 225 and 37.5. Am I right? 225 and 37.5. $37.5. Then labor. Labor cost per unit. Labor cost per unit is 150 and 25. 150, 25. Then we have variable overhead, material related, 29.5 and 47.21. 29.5 and 47.21. Then variable overhead, related to labor. Related to labor, we have already computed 99.66 and then 85.42. Okay, so total variable cost. Total variable cost per unit, 225 plus 150 plus 29.5 plus 99.66 will give you 504. 504.16. We have 37.5 plus 25 plus 47.21 plus 85.42. 195.13. Is it clear? Okay. So what happens is you can compute what? Contribution per unit. Contribution per unit. How do you compute contribution? 740 minus 504.16. Contribution is 235.84. Then here 151 minus 195.13. What is the contribution? Negative 44.13. Okay, and contribution to sales ratio or PV ratio. It is 235.84 on 740 percentage. 31.87 percentage. Here it is not to be computed because the negative contribution, but still 44.13 on 151. It is negative 29.22. Okay, so minimum required contribution to sales ratio 28%. This is positive. This is also 20%. So what should be the decision? Here minimum required is 28, but how much? The star gives 31.87. So decision is accept the order. Here it is negative contribution as against the required contribution of 28. So do not accept. Okay, so what is the question? The question is give a financial analysis of the decision strategy XYZ may implement about the manufacturer. Discuss whether activity based management should be adopted in companies like XYZ. Okay, so here what do you have to do? Analysis. How do you do analysis? Analysis can be done by comparing the previous method figures and the current method figures. Okay, so existing system, then ABC system. Okay, so you can write product under existing system, contribution per unit, contribution to sales ratio, decision. Here contribution to per unit, then contribution to sales ratio, again decision. Okay, so product first is star. What was the contribution per unit in the existing system? Contribution per unit was we had done somewhere the beginning. $117.50 and 117.50 and 47.25. Ratio was 15.88 and 31.29. Okay, so this star contribution per unit is CS ratio was decision. Reject the order. Why rejection? Because no minimum CS ratio. Okay, now dwarf. What was it? Dwarf case? Dwarf case, it was contribution per unit was 47.25. Okay, then 31.29. So decision was accept. Whereas under ABC system, how did it change? Contribution per to sales. In case of star, it is 31.87%. Sorry. Contribution per unit was how much? 235.84. 235.84. And in case of dwarf, it is negative 44.14. Contribution to sales ratio. Contribution to sales ratio is 31.87%. Whereas here it is negative 29.3 ratio. What is the decision here? Accept, and here reject. See the variation in the result when we applied the traditional system and the ABC system. Okay, so what is the conclusion you can give? Conclusion is ABC system gives a better analysis of the product as compared to the traditional method. This is because the cost allocation method adopted in ABC system is more scientific and realistic than the traditional system of overhead absorption. Okay, traditional system may result in wrong decision making due to its inherent limitation in overhead allocation. Therefore, it is better to adopt ABC system of overhead allocation allocation. Okay, this is an introduction. Then you have to say in the present case, the decision taken based on the existing traditional system will only give absurd results. And will result in completely wrong decisions. Okay, so you can also compare between the contribution to sales ratio and the contribution per unit in case of both the products under these two these two methods. Okay, that is what we have done in this table. Okay, completely wrong decisions. Okay, the above analysis makes it very clear that the decision based on existing system will lead to wrong results. As per the existing system, okay, which one was performing well? Dwarf product was giving a high contribution to sales ratio of 31.29% as regards the ratio of, or as against the ratio of how much in case of the star? 15.88% in the case of star. However, based on ABC, it is clear that dwarf is a negative contribution product and should never be accepted. On the other hand, the star yield a CS ratio, contribution to sales ratio of 31.87% as regards the required 28%. Therefore, it should be accepted. See how the decision changed when you move from the traditional method to the new method. Okay, that is what the question intends to project. Okay, right, now we will have to move to the there is one more sub question. Discuss whether activity based management should be adopted in companies like XYZ. The answers I have already given. What is the advantage of ABC costing? Why this is superior to the traditional costing? So those things you can write here. Okay, now I think we can move to the next question. Question number 3, CPA, Customer Profitability Analysis. Okay, please read the question number 3. Okay, hope you have read the question. We will read the question once again. What is given here? ANCA Limited has decided to analyze the profitability of its four retail customers. It buys product BioAqua at 128 per case and sells to them at a list price less discount. The data pertaining to four customers are: there are four customers A, B, C, D, number of cases sold, then list selling price, actual selling price, then number of sale visits, number of purchase orders, and number of delivery kilometers. Okay, its four activities and cost drivers are sale visits 1, then order taking, then deliveries and product handling cost. Cost driver rates are also given. Sale visits, it is rupees 750 per sale visit, then order taking rupees 800 per purchase order, and deliveries rupees 10.50 per delivery kilometer traveled. Product handling cost is rupees 2.50 per case sold. Now compute customer level operating income and to analyze the profitability of each customer. The first part is very simple. It is just to calculate the customer level operating income. But the analysis part of second analysis part, that is the second sub question, requires a bit of analysis of the results. Okay, so first we will do the first part, that is customer level operating income. Okay, so you can write the heading statement of customers profitability. Statement of customers profitability. Okay, statement of customer wise profitability or customers profitability statement. Okay, we have customer A, then B, then C, and D. Okay, you should start with the sales units. What is the sales units? Number of cases sold. Units 7,580, then 38,350, 78,520, and in case of product D, it is 15,560. 15,560. Okay, now you know what is the list selling price and actual selling price. Okay, so take list selling price per unit. It is same for all the four customers. So that means the company is selling same product for all the four customers. 250, 250, 250, 250. Okay, now what is happening is there is actual selling price. Okay, actual selling price. What is the actual selling price? Actual selling price is 245, then 236, 236, 228 and 232. 228 and 232. So what is this difference between list selling price and actual selling price? The difference between list selling price means you can't call it as MRP, but that is the rate at which this particular product is listed to the customers. But when the customers comes and they do bargaining, there are certain other terms for discount. All those things comes and actual selling price will be different from the selling price. Okay, MRP is the rate at which a product is sold to the end consumer. Okay, but list selling price could be the selling price listed by any other previous seller, maybe the manufacturer or the distributor or whoever. Okay, so here you have to compute one more thing. What is that? Discount per unit. Okay, discount per unit. In the first case it is 5 rupees. Here it is 14 rupees per unit, and here is 22, and here 32 to 18. So you can compute percentage of discount. All these things are required for your analysis. So 5 on 250, how much? 2%. But 14 on 250, how much? 5.6%. 22 on 250, how much? 8.8%. Then 18 on 250, how much? 7.2%. Okay, see the variation in the percentage of discounts. Okay, naturally, whenever there is a change in the percentage of discount, what will happen? The profitability may also be affected. Yesterday, we saw one case where transportation cost was compensated on the basis of discount. Okay, but there was huge variation in the discount offered and the transportation cost incurred, due to which one particular customer became very least profitable. Okay, we saw one example yesterday. Similar case may come here also. The percentage of discount varies based on the customer to customer. It could be due to various reasons. Some customer may be buying huge volume, due to which the company is forced to give a higher discount. Similarly, okay, now now this is the percentage of discount. Now what I am doing is I am going to do the profitability analysis. So actual selling price per unit is, I am writing it once again, 245, 236, 228, 232, less what? Variable cost per unit. Is it given variable cost? Is there any information regarding the variable cost? Yes, it is purchased at 218, so that should be the purchase cost. Okay, purchase cost, 218, 218, 218. What about the other cost available? The other cost, the sale visit cost, then purchase orders cost, then delivery cost, those things are overheads. Which type of overhead is is these things can be directly identified with the product? No, it's not possible. Okay, because most of the costs are incurred on batch basis. Say sale visits, can you allocate it to each single unit? No. Okay, so I'm not taking it as a direct cost here. We will take it separately. So right now I am computing the gross margin. What is this? 245 minus 218, 27. Then 236 minus 218, 18. Then 228 minus 218, 10. 232 minus 218, 14. Okay, then you have total contribution. Total contribution is actual selling price into number of units sold. Gross margin per unit into number of units sold. So 27 and 2, how much? 7580. 7580. It comes to 2,04,660. 2,04,660. Then 18 into 38,350. 38,350. 690, 300. Then 10 and 2, 78, 250. So 7,85,200. Then 14 into 15, 560. 217,840. 217,840. That is total contribution. Now what you have to do? Less overheads. Allocated. Okay, which is the basis of allocation? It is already given. 4 activities and cost drivers per unit is available, and the consumption, those information are also available here. Okay, so allocated, which is the system ABC system of method. Okay, which is the first one? Sale visits. Okay, sale visit cost. What is the cost driver? Rupees 750 per sale visit. Okay. Sale visit cost at 750 per visit. At rupees 750 per visit. And number of visits are available: 6, 12, 16, 10. So 6, 12, 16, 10. So 6 into 750, 12 into 750, 16 into 750, 10 into 750. What is 6 into 750? 6 into 750 is 4,500. 12 into 750 is 9,000. 16 into 750 is 12,000. Then this is 7,500. Okay, next is order taking. At what is the rupees 800 per purchase order. Per purchase order. And what is the number of purchase orders? 12, 18, 35, 24. 12, 18, 35, 24. 12 into 8 is 9,600. Then 18 into 800 is 14,400. 35 into 800 is 28,000. And 24 into 800 will be 19,200. Okay. Then after that, after order taking, deliveries. Delivery cost at 10.50 per delivery kilometer. 10.50 per kilometer. And what is the kilometer traveled? It is 280, 350, 450, 400. Okay. 250, sorry, 280. 280, then 350, 450, 350, 450 and 400 into 10.50, 10.50, 10.50 into 10.50. Okay, so this is 280 into 10.5 will be 2940, and this will be 3675, and this is 4725, 4725, and this is 4200. Okay, that is delivery cost. Now next is product handling cost. Product handling cost at, what is the rate they are saying? 250, 2.50 per case sold. Rupees 2.50 per unit sold. So number of units sold that is available 7580. Okay, then 38,350 into 2.50, then 78,250 into 2.50, then next 15,560 into 2.50. Okay, so 7580 into 2.50 is 8950, then this is 95,875, and here this is 196,300, and this is 38,900. So what is the total cost? Total cost, okay, total overhead cost 4,500 plus 9,600 plus 2,940 plus 18,950. This comes to 35,990. Next 9,000 plus 14,400 plus 3,675 plus 95,875. That is 122,950. Then next 12,000 plus 28,000 plus 4,725 plus 196,300. That will take you to 241,025. The next is 7,500 plus 19,200 plus 4,200 plus 38,900. 69,800 is total. 69,800. Therefore, total profit, we have the contribution minus total overhead. So 204,660 minus 35,990 will give you 168,670. 168,670. Okay, then next is 690,300 minus 122,950. How much? 567,350. Then 785,200 minus 241,025. That will give you 544,175. Then next is 217,840 minus 69,800 will give you 148,040. 148,040. Okay, now what I am doing is I am trying to see what is the contribution from each person in terms of profit. Percentage of profit to total profit. Okay, so what is total profit? Total profit is equal to 168,670 plus 567,350 plus 544,175 plus 148,040. It comes to 14,28,235. So 168,670 divided by 14,28,235 percentage will be 11.81. Then 567,350 divided by 14,28,235 will give you 39.73. 39.72. 544,175 divided by 14,28,235 will give you 38.10. 148,040 divided by 14,28,235 percentage 10.37. Okay, and you can also compute profit per unit for each customer. 168,670 divided by how many units are being sold here? 168,670 divided by number of units is how much? 7580 divided by 7580. This comes to 22.25. Here 567,350 divided by how much? 38,350. 567,350 divided by 38,350 gives 14.79. Okay, next is 241,025 divided by 78,250. 241,025 divided by 78,250 will give you 544. Sorry, this is 544,175. 544,175 divided by 78,250 will give you 6.93. Then here it is 148,040 divided by number of units is 15, 560. 148,040 divided by 15, 560. It comes to 9.51. Okay. Now, what is the second question? Second part. Compute customer level operating income. We have computed. Next, analyze the profitability of each customer. Okay. When you analyze the profitability of each customer, what are the conclusions you can take? Okay. You need three things. One is percentage of volume, percentage of profit, then percentage of margin. Okay. So now I am taking analysis. Okay. So customer wise analysis A, B, C, D. I am taking certain key figures here. Okay. Percentage of volume of sales. Okay. What is the total volume? Total volume is how much? 7580 plus 38,350 plus 78,250 plus 15,560. It will be 139,740. So here percentage of volume. A is Buying how many units? 7580 divided by 139,740. What is the percentage? 7580 divided by 139,740. Percentage is 5.42 percentage. Now in the case of B, how many units? 38,350 on 139,740. 38,350 on 139,740. Percentage is 27.44 percentage. Okay, next is 78,250 on 139,740. Okay, 78,250 divided by 139,740. That will give you 55.99 percentage. Then next is 15,560 divided by 139,740. 11.13. This is the contribution to the total, the contribution of each customer to the total sales volume. Okay, A is contributing to 5.42 percentage, B 27.44, C is contributing 55 or 56 percentage of total volume, and whereas D contributes 11.13 volume. Okay, now coming to percentage of total profit. Okay, how much they contribute to the total profit? Here 11.81, 39.72, then 38.10, then last one 10.37. Okay, next one more thing, profit per unit. Profit per unit, how much? Rupees 22.25, rupees 14.79, rupees 6.95, and rupees 9.51. Now one more information I am taking, percentage of discount given. How much discount is given to each party? Here it is 2%, then 5.6%, then 8.8%, then 7.2%. What is the inference you can take? The first inference what you can take is, who is the market leader in terms of sales volume? C is contributing around 56%. Okay, followed by B 27%. So both B and C together they contribute around 56 plus 27. 56 plus 27, that is 83% of total volume. So these two customers are the customers who gives you the highest volume. And in terms of profit, B and C together gives you how much? 38.1 plus 39.72 percentage, 77.82 percentage. So though these two customers together contribute around 83% of the volume, from profit perspective these two contribute only 77%. So if your entire sales is made, main sales are made to two customers, then your profit should also be from that particular two customers itself. Okay, in the case of A, your volume is only 5, but they are contributing how much? 11.81 percentage. In the case of D, your contribution sales volume is 11.13 percentage, but they are giving you only 10% of the profit, matching. Okay, so now here who is the customer who is eroding your profit? The customer who is eroding your profit is C. Why C? C is the person who gets 55 or 56% of your total volume, but they are contributing only 38% of your profits. Whereas B, who just contribute how much? 27%. That is just 50% of the volume contributed by C. They are able to provide how much profit? 39. That means a profit higher than that of C. That is the lacuna. Okay. Why this is happening? If you see the discount given by the company, 8.8% of the discount, 8.8% discount is given to C, whereas 5.6% discount is given to B. Okay. So the discount given to C is huge, which erodes the profit of the company. That is the first conclusion. Okay, so you can write. The question is to analyze the profitability of each customer. So you can write, in terms of sales volume, in terms of sales volume, customer C contribute 56% of total sales. Customer C contributes 56% of total sales. Whereas followed by customer B, contributing 27.4%. Followed by customer B contributing 27.4%. However, from the profit perspective, customer C is contributing only 38% of the total profit. Only 38% of the total profit. Only 38% of the total profit, as compared to 39%, or you can round it off to 40%, as compared to 39.7%. 39.7% contributed by customer B. Okay, this analysis leads to a conclusion that customer B has failed to contribute sufficient profit in comparison to the sales volume. On the other hand, customer B contributes the highest profit with about 50% of the volume, about 50% of the volume, 50% of the sales volume, as compared to customer C. Full stop. On analysis of these reasons, customer C is given a huge discount of 8.8%. 8.8%, resulting 8.8% on the list price, resulting in a meager profit per unit of 1 rupees 6.95 per unit, rupees 6.95 per unit. On the other hand, on the other hand, customer B is given a discount of 5.6 percentage. Customer B is given a discount of 5.6 percentage, 5.6 percentage on the list price, resulting in a profit per unit of rupees 14.79, rupees 14.79 per unit. In bracket you can write what is it, what is 14.79 in comparison to 6.95. 14.79 divided by 6.95 percentage, in bracket 212 percentage of the profit of customer C, 212 percentage of the profit of customer C, bracket closed. Okay, bracket closed. Okay, full stop. You can next sentence, though customer C is entitled for a higher percentage of discount, due to the higher volume, comma, the percentage of discount should be renegotiated, percentage of profit should be renegotiated to match with to obtain sufficient required profit per unit, sufficient required profit per unit. Okay, full stop. That is the first observation. In case of customer C, the discount given is high, very high, which pulls down the profit per unit to 6.95 per unit as compared to 14.79 rupees per unit in case of customer B, which has to be looked into. Now, is there any other information? Is there any other observations you can make? If you see customer D, what is the sales volume? Sales volume is only 15,560. Okay, which is just 50% of or even lower than 50% of the volume of B. But see the discount given. Discount given is 7.2 percentage as compared to the 5.6 percentage given to customer B. Okay, so that is one observation. Now next observation, point number two. Customer D who contributes only 11% of volume, 11% of sales volume, is given a higher discount, of 7.2 percentage, higher discount of 7.2 percentage as against 5.6 percentage discount, 5.6 percentage of discount given to customer B, in bracket you can write contributing 27% of total volume, in bracket contributing 27% of total volume, bracket closed, full stop. This cannot be justified, and the discount should be renegotiated, with customer D. Next, If you see customer A is providing you only 5.42% of the total volume. But the irony is it is providing you 11.81% of the total profits. Okay, with just 5% of total volume, it is giving you 11.81% of total profit. Why is it so? Because it is given only 2% discount. So there is one thing which the company should look for is product. The customer A is very highly profitable. Okay, because it is giving you a profit per unit of 22.25, which is the highest among all the 4 customers. So what you can do, you should be able to increase the sales to customer A by giving an additional discount. Say from 2%, if you increase the percentage to 3% or 4% or 5% even, you may be able to give a higher profit to you may be able to make a higher sales volume to customer A, which will increase your profit. Okay, so that is next point. Next point, in case of customer A, the discount given is only 2%. The discount given is only 2%. However, it contributes 11.81% of total profit. 11.81% of total profits. 11.81% of total profits from just 5.42% of total sales volume. From just 5.42% of total sales volume. 5.42% of total sales volume. Also, it is the highest profitable customer. It is the highest profitable customer, contributing 22.25 rupees per unit profit. Contributing 22.25 rupees per unit as profit. The company should take sufficient steps to increase the sales volume of customer A. Why you have to increase the sales volume of customer A? Because it is the highest profitable. It is the customer which provides the highest profit. So if the volume is increased, your profit is also going up. So how you can increase its volume? By increasing your discount, percentage of discount. Okay, should increase the sales volume by offering additional discount. Discounts, which will improve the overall profits of the company. Okay, now that is with respect to these two analysis, like the percentage of profit, then percentage of volume, etc. Now if you see the activity cost, okay, the activity cost and its consumption, what you can find is, in the case of customer A, what is the number of sale visits? It's 6. In case of customer B, how much? 12. And customer C, it is 16. Whereas customer D, it is 10. Now, number of purchase orders. How many purchase orders are kept by A? It is 12. Whereas B, it is 18. In case of C, it is 35. Okay. Whereas in case of D, it is 24. Okay. Now, number of delivery kilometers, it is 280 in case of A. Then B, it is 350. Then C, it is 450. Whereas D, it is 400. So one thing I can tell you, in case of, say, customer D, the sale visits, purchase orders and deliveries is very high as compared to the others in proportion. Am I right? Because they are contributing product. The customer D is just contributing how much sales volume? Customer D is contributing only 11% of the sales volume. 11% of the sales volume, for which you are providing 10 site visits. 24 purchase orders and 400 delivery kilometers. Okay, with just 11% volume. Okay, that should be analyzed. Okay, so you can write that also. Next, from the perspective of activity cost drivers, customer C consumes the highest quantity of customer C consumes the highest quantities of cost drivers, full stop. This is justified, full stop. This is justified considering the volume of sales contributed by customer C. The volume of sales contributed by customer C. Full stop. However, the firm may try to reduce the consumption by customer C considering the huge discount offered to it. One side, the company is giving products, the customer see 8.8% of discounts, okay, on the list price. On top of it, it is consuming, this customer is consuming the highest quantity of cost drivers. So the company it is justified, because the customer which provides you 55% of your total volumes, it will definitely be the leader in consuming the cost drivers. That is okay, but you can try to reduce it. Why? Because for the volume given, the customer is given a higher discount also. So on one side you are giving a higher discount, and also that customer is consuming huge volumes of the cost drivers, which is eroding your profit. Okay, now next point. On the other hand, customer D, which contributes only 11% of the total sales volume, only 11% of total sales volume, is consuming cost drivers at a higher level than customer B in bracket contributing how much sales volume, in bracket contributing 27% of sales volume, bracket closed, full stop. This should be closely monitored, and the consumption of cost drivers by customer D, should be brought down to below that of customer B, that of the customer B. Is it clear? So these are the observations which you can make out from the cost driver consumption. Okay, right. So that's all with that particular problem. Now I think we will have to move to the next question. Okay. Okay, we will do one thing. Right now it is 12:45. We don't have time to do this problem, complete this problem, because we have hardly 15 minutes for the lunch break. So today we will right now we will break for lunch. Then after that we will meet back at 2:15. Usually we meet commence at 2:30, but today we will stop now and we will meet back by 2:15. Okay, right. Thank you.